In 2003, the financial world was preparing to perform an autopsy on Denmark's most iconic brand. In just 1 year, Lego's revenue had plummeted by 25%, and the company had become a wreck, buried under $800 million in debt. To analysts, the diagnosis was simple: plastic bricks died in the digital age. However, this would become one of the greatest strategic miscalculations in history. Today, we will examine not only Lego's escape from bankruptcy, but how it financially dismantled giants like Mattel and Hasbro, turning plastic into gold. The toy industry is historically built on low loyalty and high trend dependency. By the end of 2024, the global toy market reached approximately $112 billion in volume. Yet, this market is not the linear, slow-growing retirement home it appears to be. It is a brutal arena where digitalization, economic stagnation, and shifting parenting habits collide. In this arena, there are three titans: Mattel, Hasbro, and Lego. But as we enter 2026, the picture has become clear. While its competitors struggle just to survive, Lego is redefining the market. Let's go back again. In 2003, Lego experienced the greatest financial catastrophe in its history. The company announced a loss of 1.4 billion Danish krone, roughly 160 to 200 million US dollars. Sales dropped by 25%. Lego is a Danish family business, and the Christiansen family was considering handing over or selling the company. In October 2004, a new CEO, Jørgen Vig Knudstorp, took the helm at just 35 years old. Knudstorp was the first CEO from outside the family. When he stepped in, Lego hadn't just run out of cash. It had lost its identity. Knudstorp realized that the problem wasn't the children or the rise of the internet, but the company's own uncontrolled expansion. Lego was producing so many unique parts that logistics costs were devouring all sales profits. The strategy was brutal. The number of unique pieces was slashed from 13,000 to 6,000. He shut down side ventures like complex video game projects and jewelry design. This was known as Operation Cleanup. The company sold 70% of its stake in the unprofitable Legoland parks to Blackstone. Lego stopped being a real estate and logistics company and transformed into a pure IP, intellectual property, and design firm, an asset-light model. As a result, the revenue, which was 6.8 billion Danish kroner in 2003, reached 74.3 billion Danish kroner, approximately $10.8 billion, by 2024. This is the largest leap since the 2003 collapse. But the real shocker is the operating margin. Lego operates with an 18.7% operating margin. This means, for every $100 of sales, $19 is direct operational profit. Now let's look at the competitors. Despite the tailwinds of the Barbie movie, the US-based Mattel operates with a 12.8% margin, while Hasbro sits in the 10 to 12% range. Lego doesn't just sell more than its rivals, it makes twice as much money from every unit sold. Aside from everything else, even the Lego movie, released in 2014, created an economy all on its own. With a production budget of approximately $60 million, the film grossed over $468 million worldwide. That is nearly an 8x return on investment, purely from box office receipts. In the year of the film's release, Lego's global sales surged by 13%. This was the definitive moment Lego officially bypassed Mattel to become the world's largest toy manufacturer. This wasn't just a movie. It was a 100-minute high-definition commercial that people paid to see, proving that when your brand is a system, every medium becomes a sales channel. Now, let's look at market capitalization. Lego is not a public company, but what would it be worth if it were? Let's run a projection. Mattel's market cap is $7.2 billion, while Hasbro sits around $11.5 billion. Mattel's share price has dropped from $35 to the $18 to $20 range over the last decade. while Hasbro's price experienced massive volatility, falling from the hundreds to the 60s. Lego, on the other hand, announced a net profit of $2 billion. If Lego were valued with luxury goods or technology multiples, its market cap would be between $35 and $50 billion. That is more than double the total value of its two giant rivals combined. Because Lego is not traded on the stock market, it is liberated from Wall Street's quarterly pressure. This patient capital allows them to invest in 10-year R&D projects that their competitors wouldn't dare to touch. Strategically, Lego hits its rivals through raw material dependency. Today, Disney, Warner Brothers, or Formula One must go to Lego to showcase their products. Because a Lego version of a product means its cultural immortalization. While Hasbro loses Disney licenses, Lego has monopolized these licenses in brick format. This gives them pricing power. It is difficult to sell a Hasbro toy for $500, but selling a $500 Lego collector set is seen as a rational investment by collectors. Now, let's look at how Lego turned plastic pieces into an investment vehicle. Most people see Lego in a child's room. Financiers see it as an alternative asset class. A comprehensive study by HSE University examining 2,300 sets between 1987 and 2015 revealed a jarring truth. Lego regularly outperforms gold and bond markets. According to this research, the average annual real return of sealed Lego sets is around 11%. This figure is higher than the S&P 500's historical average of 8%. In the same period, gold's annual return was only 4%. But the most interesting numbers are hidden in small-cap sets. Contrary to popular belief, the massive sets found in Lego stores, like the Millennium Falcon, are not always the most profitable. Lego ideas, architecture, and seasonal special edition sets can yield returns between 30% and 50% annually due to scarcity. How do we track these massive return rates? Contrary to what people think, the world of Lego is not child's play. It is a high-frequency data ecosystem with its own Bloomberg terminals and stock indices. At the heart of this ecosystem lies Brick Economy. This is essentially a Bloomberg terminal for investors. The platform's most critical tool is the Brick Economy 100 Index. Just like the S&P 500 or NASDAQ, this index tracks the performance of the 100 most popular and highest investment value Lego sets in real time. If your portfolio is outperforming this index, you are a more successful investor than most fund managers on Wall Street. But the data doesn't stop there. To understand the true market value of a set, BrickPicker comes into play. This platform analyzes thousands of actual sales on eBay and other auction sites to reveal the market reality rather than the emotional price. If you are going to make a physical transaction, you must look at Bricklink, the world's largest Lego marketplace. The price guide here provides a breakdown of actual sales from the last 6 months, eliminating speculation and showing you real liquidity. Even more interesting, in the Lego economy, price is determined not by production cost, but by the cessation of production. The moment an end-of-life date is announced, prices in the secondary market begin to rise logarithmically. As long as the box remains unopened, that set is no longer a toy. It is a sealed futures contract. For example, Lego Star Wars Cloud City, set 10,123. In 2003, it sold for just $100. Today, a sealed box is valued at over $10,000. That is a 10,000% return in 20 years. Another example, Cafe Corner, set 10,182. In 2007, its retail price was $139.99. Today, a sealed box is worth approximately $4,500 to $5,500. That is a 3,200% return in 19 years. Why is it valuable? Because it is the first set of the Lego Modular Building series. Every new adult collecting this series is desperate for this first set to complete their collection. Supply is fixed, demand increases every year. And another example is the NASA Apollo Saturn V, set 21,309. It was released in 2017 with an original list price of $119.99. Immediately after it was retired, its price settled into the 150 to 200% range within just 2 years. Why Lego? Because the Lego market shows a negative correlation against stock market crises. During the 2008 crash or the 2020 pandemic, while stocks plummeted, Lego prices either remained stable or continued to rise. Because the main fuel of this market is nostalgia and passion, an emotional demand independent of rational economic data. Economists call this the toy version of the Big Mac Index. Lego prices are even used for international arbitrage. For instance, the price difference between a Danish-made set in Mexico versus Japan reveals everything from a country's customs regime to currency parity. Lego isn't just selling toys. It is printing an alternative currency that resists inflation and the stock market. Lego has evolved from a bankrupt family business in 2003 into a global standard with an imaginary market value of $50 billion. Today, Lego is not just a toy maker, it is an investment firm. A stock can go bankrupt, a crypto asset can be deleted, but a sealed 2003 Cloud City box is no longer just a physical object. It has become a perfect deflationary asset where supply is zero and nostalgia dominates. Meanwhile, Lego continues to steal 1 to 2% of market share from its rivals every year, with 314 new sets. While Mattel and Hasbro try to save the day with film projects like Barbie or Transformers, Lego continues to build the world piece by piece with over 30,000 employees. Ultimately, Lego's transformation serves as a masterclass in the alchemy of branding. While their competitors chase transient cultural ghosts and quarterly dividends, Lego has built something far more resilient, a universal language of creativity that doubles as a hard asset. They didn't just fix a supply chain. They engineered a financial ecosystem where nostalgia is the currency and scarcity is the law. In an era of digital volatility and planned obsolescence, Lego stands as a defiant monument to the power of the tangible. They proved that if you control the system, you don't just survive the market, you become the standard by which the market is measured. The lesson is simple. Don't just build a product, build a kingdom brick by brick. Remember, if you build a system, you don't need market trends, you become the trend itself. If you want to pull back the curtain on the economic and strategic secrets that most people overlook, don't let this be your last stop. The world is full of invisible data, and here, we make it visible. Subscribe now to ensure you never miss the next deep dive into the world's most powerful business moats. Join us and stay ahead of the curve before the rest of the market catches on.